Hello, ladies and gentlemen, and welcome back to a special weekend edition of the markets around the world. Well, trillions of dollars of option puts have now expired, and that in some ways has released the stock market of its shackles. There was no way the market wanted to go down and pay those out. And this is the manipulation that we need to understand that Wall Street does place on a monthly basis during the third week options expiration point. So what are we left with? Well, we're left with a long leg doji, but it's more important than that because what actually has been happening during the formation of the last week has been the stocks market moving defensive in its posturing. Effectively, the sector rotation has all been towards utilities, staples, and others. What does that mean for the markets moving forward? Well, we've got you covered today for stocks, commodities, and cryptos. See you soon. Well, welcome back, everybody, to the Daily Show. We'll be talking about the key macro data, the lead indicators, and of course, the key levels that you should be watching this week. But let's begin with some macro stuff. Let's talk about the SP 500 after investment grade bond breadth thrust signals. Now, this has technically been pretty good in the past. In fact, a lot of the time it leads onto 80% plus bullish moves in the markets. I do want to just quickly draw our attention, though, to 2008. We got a thrust signal, and then we had one last false breakout. This is something that's going to be incredibly important over the next coming months and weeks. If we go to a 45 VIX plus, which is something that we've been talking about, that could mean that we've got that maximum fear coming into the markets. Usually it is assigned with capitulation, very similar to 2008 in that case. When we see these types of things, if bonds hold or don't drop much, that is a fantastic sign. So make sure you subscribe to the channel because if that occurs, we'll be paying a hell of a lot of attention, and it's one of the best indicators out there. What about the week ahead, though? Are we feeling bullish or bearish? Well, it's hard to be bearish moving into the middle of the week. Now, what happens before that? We'll talk about that soon. But basically, if we take the cumulative percentage of holiday days versus all other trade days, there's no doubt that holidays bring the cheer. We also see that if we bought the Dow 3 days before each trading holiday, we tend to do pretty damn good. So this is something that has to go into the back of our minds. It's the holiday period, and this tends to do a little bit better in the markets. What about smart money versus dumb money? Well, I'd say they're interlocked together. It's unusual because in 2022 so far, when we've used this signal, the crosses of smart money and dumb money showing us that maybe we need to be careful in these markets during the rallies, we've usually seen smart money continue on down. That's not what we're seeing quite yet. We'll keep following it. We'll bring it back when we get some clarity on that situation. What about SPY breadth percentage? Is that looking good? Yes. I mean, for bulls, they'll definitely like it. Breadth is, again, one of the best indicators, though it has been false moved a few times in 2022. So you've got to take this with other indicators. And we've got some of our favorite ones later on today's show that we want to show you, want to understand. And they're not so positive towards the markets like this one is. Now, if you haven't already, come and follow us over at FX Evolution on Twitter. Make sure it's at FX Evolution, spelled correctly, and not with some kind of weird letter or something. Yes, unfortunately, there's a few imposters out there on Twitter. Make sure you report them if you ever see them. And what we're posting here is we're going to be posting one of our private reports each week. So make sure to come across. Great report. You can always check it out and see what you think of it. It was pretty good last week. And then we move over here to gold as well. I just wanted to talk about this. Now, I said that I would update gold as we saw the bigger money kind of coming in. And we have seen a huge spike in recent weeks. This is showing us a strong return to form for gold. And of course, you've seen that really represented in the price action, which we've been talking about now for 2 weeks. I still expect that the markets probably will take a bit of a dip because the word has spread on gold. Everyone's talking about it. But this is a great sign and a great step up here for the metal. It's been a long time coming. It's been a while since gold has actually found some strength, and we'll be continuing to follow that over the next coming weeks. So make sure to follow along. So I mentioned that underneath the hood is where we're watching in stocks right now. Take a look at some of these top sector performances over the last 5 days. Staples, utilities, healthcare, industrials. Yeah, that's not really the ones that you usually see with a nice recovery. That's defensive. And if the markets have been moving into defensive ahead of, let's say, the big trillions of dollars of options expiration, does that give us a sign of potential turnaround to the downside? Okay, inflation dropped. you would think that everything from semiconductors to technology to anything in consumer discretionary should all be flying. Well, the stats aren't saying that, especially over the last 5 days. And semiconductors, which we'll be talking about soon, are even weirder. And that's something we need to discuss. So just before we jump into today's video, I want to say a thank you for today's sponsor, which is, of course, Tiger Brokers. And what I wanted to do was show us just this a little bit more in depth of the percentage changes. Now, this is the heat map that Tiger Brokers has in its platform. And if we go to the 5-day percentage change of the top 30 market cap sectors within the market, what you can see here is that it's clearly moving towards the defensive side. Pharmacy, a standout here. Also hypermarkets and supercenters. These were the ones that Wall Street and the rest of the big players were buying over the last couple of sessions. They weren't buying automobile manufacturers, and they certainly weren't buying order application software. So what this becomes very important is when you think about it, you go and look at these charts, and you find out whether there are signals for you in those sessions. Now, what tends to occur is it happens over a few weeks, if not a few days, where you get these rallies through certain sectors and, of course, weaknesses in other. Now, semiconductors were one of the best sessions and the best sectors for the last 2 weeks, but now they've become probably one of the worst sectors and they're looking a little bit sick on the charts. So it really pays to have a platform where you can see this represented, and then you can go in and dive into those charts, set alerts, and do all of those kind of good stuff. So remember, if you're interested in Tiger Brokers, they have a whole bunch of special offers. The link's in the description down below. So let's jump into the charts. Let's talk about the VIX. So of course, the correlation with the VIX is always really, really important. We haven't seen a breakout period in 2022, and that's unusual. If we go all the way back to 2008, 9, yes, a lot of people are drawing this correlation. We've done it for well over a month now. And the reason why we're talking about it is because we're basically at these levels. You can kind of see it's almost a carbon copy. Now, there was usually one last thing. Could that be the spillover of FTT, this $1 billion of disaster? Was it 30 billion plus, I think, of disaster? Is that going to spill and become a semi-contagious event? Is there something else that's going to become it? Sometimes there are black swans that cause fear peaks, and these fear peaks tend to be the best periods of time. As Warren Buffett says, be greedy when others are fearful. The VIX helps us with that. So if we're going to spike, you would expect it over the next 3 to 4 points from the VIX. When we get back to 20, that's generally considered a bear market becoming a potential bull market. That's a very important point in these markets. We've also seen PCC dropping a little bit. That means that there's a little bit more calls coming into the market. Again, we want to see this as low as possible with as high as possible if you're a bear. And the reason why is because, as you can see, when you get these lower readings and they're near the peaks, that's usually showing you that a little bit of FOMO is coming into the markets. Are high yield bonds coming along with corporate grades? Not really. High yield bonds have been lackluster. And this is interesting compared to corporate grade bonds. Corporate grades have been getting absolutely bought up. High yields, not so much. We'll continue to watch this. This has been a pretty good barometer of the health of the US economy this year. So if we start seeing high yield grade bonds come with the market again, we need to be paying attention and saying another tick in the favor of potentially this actually being the low. We haven't seen that just yet. What about yields? Well, they're creeping up again as well. Maybe the data isn't looking so good. The UK CPI numbers, other core inflation, core retail sales, all these types of things. Maybe the data is pointing towards a bigger and higher Fed terminal rate. Maybe we have to go over 5%. Take a look here at the 2023 basically terminal rate right now. Well, actually, the terminal rate's later on in the year, according to the market, September, almost 5% again. That's not good. So something is going on underneath the hood, and the markets are starting to sniff it out. Again, they've moved defensive. There's yields increasing. If we see a new high, let's say on the terminal rates moving forward, we have to be paying attention. That's most likely going to fall the market, and the market's going to come right back down, potentially back into those 36s, and we'll talk about those soon. Let's have a look at the US dollar. Is it showing signs of strength? Well, most of you will know this is an inverse head and shoulders now, or potential anyway. And if we break through our all-important level we've been discussing now for days, then that could be a great signal towards weakness in the stock market. It didn't happen through the Friday session. It hasn't happened yet, but it's one we're watching. Conversely, we're expecting euro to also weaken at that point. Let's have a look where the euro is. So it may look inconspicuous, but there's actually a little bit of supply that sat here that ended up causing a massive sell-off. And that was actually semi-reacted to over here. So we're in the important zone for the euro. Again, weakness. We're in the important zone for the DXY in terms of strength. They correlate with each other very nicely. Now, we mentioned gold's being bought up by the big players. Yeah, it is. I mean, gold has been quite bullish in recent weeks. And if we think about it, it's just gone up, created little flags, gone up, created little flags, and moved very, very healthily. It has hit what we call basically the most traded level of the last 2 years. And that zone has been reacted off. The market's moved towards the bearish side. There's a little bit of action in here, but generally speaking, you've got to think that gold might be looking for a bit of a cool-off point. Some of the key zones to be looking for, 1710, 1673, and we do expect buyers to come back in based on what we've seen in the monetary flow. The big traders have started purchasing, usually as a cool-off period after that, and then they look to build a position. Ask yourself, what does the composite man or Wall Street want to do in these markets? They want to build the biggest position possible, and they want to do it over time so they can get the liquidity and not show their hands. That's why you get these dips in markets. Start thinking like they do, and you'll start to have a little bit more success, I believe, especially in your day trading and swing trading methods. US oil has dropped in line with our weakness thought processes, realistically. Recently, it actually almost dropped to a new low. Now, energy stocks did not drop anywhere near as much, but this is a big one. I mean, we've seen it almost tank all the way back down to the lows. It was instantly bought at this zone, and you can see this nice wick here on the daily in terms of how it was bought up. Let's have a look at the smaller time frames. So it dropped, big fall off, huge, and it's come back down to this area. Now we've found buyers. I would think that you could make it to 82 or even 84 in the week ahead for potential sell-off into the rallies. If we end up getting a high past this area, you've got to question whether we're getting a little bit of a turnaround. Remember, we have seen a wick, and the reason why is because there were buyers. Somebody wanted to demand this level. It just fell off a cliff. It would have been pretty brutal if you were the opposite way on this one. And now if we do start to see the returns, it could actually start to bounce up. So we'll have to follow this one. It'll be a day by day this week. But at this stage, 82-ish should be met by sell demand. And you would have to think that they're pretty heavy on the sell load. So definitely watch this zone for the week ahead, an important one. Let's move over to the markets. What have we got going on? Well, we've seen semiconductors weakening. We've actually got a little bit of an island reversal. It gapped up here through the session. And the private community, I was talking about this one. And then we saw a nice little sell-off throughout the day. Obviously, it still ended up basically positive 0.18%. But if you were there in the session open, a nice little sell-off. Nvidia also continued to weaken, down 1.71%. So this is after the earnings result. Again, nice weakness throughout the last week. Maybe it's moving towards filling that 140 gap. And again, if that happens, what's going to occur with the stock market? Well, semiconductors are a big part of it. So if these fall off, you've got to think stocks weaken at the same time. And at the moment, the thing holding up the stock market has been the defensive sectors. That's what we've been watching the last couple of days. So semis continuing to look weak here throughout the markets. Another weakness point, Tesla, down another 1.63%. It actually swung the low and then instantly found buyers. Look at this. Not quite hitting my alert, but it swung the low. So let's take a look at the 15-minute chart here. So that's actually consistent with nice buys through the session. If you were buying down here, I think good work to you because, I like what I saw there for the session. It was a good day trade. It's still weak, though. This shouldn't really be happening. I mean, the market hasn't even fallen off that much, and Tesla is weakening. I don't really like Tesla for the longish kind of medium term until we get through that 200, create the double bottom, find some strength. At this point, I've said this for a little bit, even though I like this area to find buyers, and that's more for the day trade, if it does close below here, we've got to be seriously careful because all of a sudden, there's really not much holding up Tesla on the left-hand side, and it could force a seriously significant valuation dump. And that basically means we compress valuations. This is one of the last stocks that hasn't had that. Remember, earnings didn't really meet the expectations. It was great. It just didn't meet the expectations. Stocks are about meeting expectations. That's the big thing about the market and the street. How many stocks have we seen? Roku, Zoom, I don't know, ARK, just in terms of what they've got underneath. Basically, all of those have been compressed because the street wasn't happy with the growth anymore and the inflation. We had to compress the PCPS ratios. XLY versus XLP. What's going on here? This is our consumer discretionary versus staples. Again, 1/3 of the US economy is consumerism. 2/3 is services. This shows us the 1/3, and it's telling us that it's sick moving into the holiday season. The market doesn't like buying discretionary right now. In my general history of markets and testing, I usually like to see this indicator going up during the rallies. If it doesn't, it warns me that I don't believe the bottoms are in, or at least I don't think that's the current rally type of movement. Again, this is worrying and we have to pay attention to it. What about the Russell 2000? Well, it rallied up to these highs. Again, the supply here was too much for the Russell, and similar to other markets, they all dropped off that level. Nice trade if you got it. Not too much information moving forward in the week ahead, though. What about the DAX? This is one of the most shorted markets, actually. A lot of CFD traders trying to short this one because of its relative strength recently due to the old economy doing so well. It's moving into a key zone. I wouldn't actually mind it to do this and this. Now, if that happens, and what I'll do is I'll set a little alert underneath here. So this 14,100, I would love to see a low form there because that will give us some great short opportunities, I believe. Well, this will be very, very key. I would expect the DAX to try to make a new high, then potentially rally round. And if that happens, you've got like a double top. You've also got a rejection. Certainly a market will come back to. At this stage, though, it's bullish. There's not much you can really do about it. Let's move over to the US 100. Interesting rejection. Check out the weekly. Yes, it's a doji. It comes off our supply here, and it has a higher wick on the top than the bottom. And it shows us equilibrium or indecision, but that's certainly a weakness kind of point there for it. Let's take a look at the 2-hour here for the NASDAQ as well. A few of you will look at this and say, I'm recognizing this as potentially a head and shoulders. A lot of people will be looking at the way that the market interacted here. Notice it took this high and then it instantly rejected down. Now, it then bounced off this level. This truly is indecision. If we get a new low formed probably underneath here, which I'll set a little alert for, price-wise around 11,000, we'll go with 558, then that could tell us that the market actually wishes to make a new low and potentially swipe off some of this inefficient FOMO that came in from the inflation number. Remember, this was basically 5 minutes. So the market probably didn't get the positions they want. Now, generally, if they want to go bullish, they'll like to swipe a bit of that and get back in with a better price. That's the whole point of how these markets work. So yeah, you can make a case for both bull and bear here. I will do so using the S&P 500 at the moment, but let's have a look at the S&P 500, and that's the long leg doji. Indecision, equilibrium at the peak, the 61.8 pullback of the entire run down, a critical zone. Just behind that sits a 200-day moving average on the daily. Let's have a look now at the daily just to understand the price action so far. All over the place, lots of chop. When we go down the smaller time frames, we've filled the gap that was here. We rallied and then we sold off. Let's take a look at it with all the available information using the futures. And you'll see it's all of a sudden a very messy looking chart, but don't worry, I'll make sense of this for us. So let's have a look at the most recent price. So what I had here on the previous session is I was expecting the market to rally, and I did mention this is questionable. This one here was the one I wanted to see short. So I really wanted to see 39.80, 39.90 short. That is what occurred. Just above that, I thought there was quite a lot of reasons to believe the market could be weak. And I've set a little alert above this 4,000 plus just to see if it takes that high, because if that does happen, then especially in Thanksgiving week, you could really make a case then for that 4120, 4140 zone, which is where the gap fills exist in these markets. Yep, it moved up, it moved down. It actually made a slightly lower low and it rallied and then it shorted. This is starting to look like a turnaround to the downside. Again, bulls, you want it above here, but this is starting to look a little bit weak. So what we're looking for here is a market that makes a new low, which we'll set a little alert for, 39.33. And if that occurs, probably then taking this out and more than likely starting to move down. Now, what we've occurred previously is, again, the inflation number was very quick. There's so many things there, an unfilled gap, a daily and a weekly close, so many things sitting on the charts, all culminating in this zone here. It's also one of the most traded levels throughout all of this. Now, we didn't reach the max pain on Friday, but we certainly did reach a very good option zone. So I'll show you why more than likely the market loved closing here. Let's take a look at the options now. This is always what you should be doing. 5.174 million options expiring. That was trillions of dollars. What did they do? Well, they said, nope, not going to pay you 400. Certainly not going to pay any of the puts, which we always suspected. And our thought process was probably like a 385, 400, something in their close. Now, they chose not to pay the 390s either. So the 390s had more puts than calls. Combined, it was a pretty impressive strike, and they closed it right here. I mean, they, in some ways, looking at this chart, although I know where it says max pain is, you would think, geez, they've done the perfect job. I mean, that's the perfect steal job on everybody. Very, very nice from them. And it just shows you have to pay attention to the options market. If we move ahead and we go through to the 23rd, you'll notice that it's a lot thinner. So you can see here the Wednesday's a lot thinner. Then we'll go to the 25th, which will be the bigger options expiration. And again, notice the numbers, way less than 1 million units. Where are the option strikes? Well, we've got a little bit at 390. We've certainly got some calls coming in now, 410 and 400 quite large. And then 390, yeah, it's there, but realistically 380, 375, that seems to be where a nice level would be. If the market shorts, wouldn't that be a fantastic place then to see some defended area through the week? So I like that kind of play. I wonder if it's going to happen. Markets short potentially into those levels, find some buyers to defend that level, get the FOMO back in, make sure they can manipulate it all around into Thanksgiving. That would be a pretty cool case scenario. We do need to see the triggers though hit throughout the next week. Let's move over to Bitcoin. I won't go through too much of this, but obviously we're just talking about the cycles, the average ranges. I've speculated for a while because from here to here is actually about 420-ish days, that effectively between that let's call it 80 and 420 days should be where we find the crypto low for Bitcoin. FTX scandal, I still think has some ways to play out. There's clearly some serious issues there, and it's going to continue to be the big storyline. I think that just degrades crypto's, I guess you would say, integrity. And that's the big problem. When people don't believe in something, they end up selling it or they end up not buying in. And that means no new accounts coming in for now. Only the crypto enthusiasts will stay. Now, of course, Wall Street's in this as well at these stages. If I was Wall Street, I'd probably squeeze people out and then get back in with cheap price in the future and then push it up. Hey, that's just what I'd do if I was them. But we'll see what ends up occurring, what's the best profitability. But you can see on this chart, it is absolutely just waiting for an explosive move. I mean, it's just chilling in the middle, slowly making a series of lower highs and higher lows, getting ready for the next big move. I don't know which one that's going to be, but I do expect a fairly large explosion on this particular pair and other cryptos over the next coming weeks. You've just got to believe it. Look at that. It's just so consolidatory. The volume is not really that high either. Take a look at the volume dropping off significantly. So it doesn't look like that there's big players kind of floating around at this stage. For the economic calendar for the week ahead, we always need to check this out. We do have some central banks, but it's not really the US. Flash Services PMI coming out here, 9:45 a.m. Wednesday, November the 23rd. Then we have the FOMC meeting minutes, 2 p.m. Always an annoying period of time that will move markets. I'm sure that will have a little bit of an effect on them. Then we, of course, have bank holidays into Thanksgiving. And we really have that, hopefully, a little bit of cheer on the markets. I wouldn't mind seeing it drop and then rally. We'll find out whether that is what occurs. Black Friday's upon us, so we've made a Black Friday sale. You can jump on over to fxevolution.com. Links in the description down below, or just jump on over. And there's a whole bunch of sales out there. If you want to think more about the way that we day trade, the way we scalp markets, definitely consider the Advanced Scalping Masterclass, and that's on a great sale right now. Thanks so much, everybody. Subscribe, smash that like button. We'll see you in the next video. Bye for now.